Did you know that if you copied Nancy Pelosi's disclosed trades since 2014, your portfolio today would be sitting on gains of nearly 800%? Compare that to the S&P 500, which returned just 250% over the same period, and numbers don't lie. Pelosi's returns weren't the result of passive index investing. They weren't the result of simply buying and holding a basket of blue chips. They came from a different weapon entirely. They came from call options. Most retail investors hear the word options and immediately think of gambling. They think of Wall Street bets, of people buying Tesla weeklies that expire worthless, of Degans posting screenshots of blown up Robinhood accounts. But the truth is very different. The truth is that the wealthiest investors in the world, from billionaires to hedge funds to politicians in Washington, use options as a sophisticated tool, not to gamble, but to amplify their returns while keeping their risk defined and their capital efficient. I'm an ex-financial advisor. I spent years in Europe helping everyday people allocate over 10 million euros. And in my personal journey, I built a six-figure portfolio yielding over 25% annually in just 3 years. I don't do one-on-one consultations anymore. Everything I've learned, every insight and every strategy I give away here on YouTube. And today I'm going to break down exactly why Pelosi and other insiders prefer call options over stocks. I'll show you the math behind it. I'll walk you through real examples using today's numbers from Amazon, Alphabet, Nvidia, Broadcom, and even Tempus AI. I'll show you why these tickers matter, why Pelosi bought them, and how you can structure trades in a way that doesn't just mimic what insiders are doing, but lets you apply discipline and avoid the mistakes most retail traders make. So let's dive in. Welcome to Psycho Investor. Let's go psycho. They called me crazy when I said the S&P 500 was more of a wealth preservation tool than a wealth builder. They called me psycho when I told people that the classic 60-40 portfolio is a dead in a world of negative yielding bonds and money printers going brrr. They laughed when I pointed out that politicians, the very people writing the rules of the game, are also playing the game as participants and consistently winning. Well, who's laughing now? Pelosi's returns tell the story. On screen, you'd be seeing her tracked portfolio against the S&P 500. Her disclosed trades, filled publicly as required, outperformed the market by a factor of 3. And when you dig into the feelings, you see exactly how she did it. Not just buying Amazon shares, not just holding Alphabet or Nvidia stock. She was buying multi-million-dollar call options positions. Now, why is that such a big deal? Let's break it down. A stock represents ownership. If you buy 100 shares of Amazon, you own 100 shares. Simple. A call option, on the other hand, gives you the right but not the obligation to buy 100 shares of Amazon at a fixed price before a certain date. Instead of committing all the capital upfront, you pay a smaller premium for that right. Think of it like a real estate. Instead of buying a house outright, you put down a deposit that locks in your right to buy the house later at today's price. If the property value skyrockets, your deposit suddenly represents huge value. If property stagnates, the most you lose is the deposit itself. That's how call options work. Now, let's plug in some real numbers. Amazon today trades at about $219. If you want 100 shares, you need $21,900, not pocket change. But if you buy a 12-month call option at $220 strike, you might pay about $18 per share or $1,800 for the contract. That one option controls the same 100 shares and you've committed 12 times less capital. Here's the beauty. If Amazon drops to 180, your shares are down $3,900. With the option, your maximum loss is capped at the premium, $1,800. Define downside. Now look at the upside. If Amazon climbs to 280, your stock position is about 28%. Not bad, but your option worth around $60 per share or $6,000. You tripled your money. That's what we mean by asymmetry. Small defined risk, big open-ended reward. And that's why insiders choose options. Pelosi's feelings reveal calls in Amazon, Alphabet, Nvidia, Broadcom, and even Tempus AI. These aren't random bets. These are carefully chosen asymmetric positions. Let's take Alphabet. It trades right now at around $246. Buy 100 shares, you're in $24,600. But instead, you grab a 1-year 250 strike call for about $15 a share, or $1,500 total. If Alphabet rallies to 300, that option is worth $50 per share, $5,000 total. Subtract your cost and you've profited $3,500, a 230% return. If Alphabet stays below 250, you lose $1,500. That's it. Broadcom is another Pelosi favorite, trading now around $336. To buy 100 shares, you need $33,600. Instead, you buy an 18-month 340 strike call for about $35. $3,500 total. If Broadcom runs 450, that option is worth $110 per share. $11,000 total. Your profit $7,500. That's more than double your money. And again, your maximum loss is capped at the premium. Nvidia, the king of AI, trades at about 178 today. You could buy an 18-month 180 strike call for about $20. $2,000 total. If Nvidia surges to 250, that call is worth $70 per share. $7,000 total. Your profit $5,000 at 250% gain. Max loss $2,000. Tempus AI, same story. Tempus AI is the newer on the scene, but Pelosi has been active here too. It trades at $77. A 1-year 80 strike call might cost $8 or $800 total. If Tempus explodes to 120, that option is worth $40 or $4,000 total. Profit $3,200. 4 times your money. Now, let me emphasize something crucial. These examples aren't magic, they're math. And Pelosi isn't playing weeklies. She's not gambling on lotto tickets that expire in 5 days. She's buying LEAPs, long-term equity anticipation securities, calls with 12 to 24 months until expiration. Why? Because time is your friend. Options lose value fastest as they approach expiration. That's called theta decay. By going out 12 to 24 months, Pelosi gives her trades time to breathe. She doesn't need Alphabet to jump 10% this week. She just needs this story to play out over the next year or two. And Pelosi buys in the money or near the money strikes. That's where delta comes in. Delta measures how much an option price changes for every $1 move in the stock. A deep in the money Nvidia call with a delta of 0.8 moves almost dollar for dollar with the stock. Instead of spending $17,800 for 100 shares, you spend $2,000 for a contract that behaves almost the same. That's institutional capital efficiency. Think about that from a fund manager's perspective. Instead of buying 10,000 Broadcom shares for over $3 million, you could spend around $1 million on LEAPs and free up millions of capital for other positions. Pelosi isn't playing differently because she's reckless. She's playing differently because she understands leverage and efficiency. So how do you actually apply this as a retail investor? Start with the same tickers as Pelosi touches: Amazon, Alphabet, Nvidia, Broadcom, Tempus AI. They are liquid. They have deep option chains. They have real catalysts. Choose LEAPs 12 to 24 months out. Aim for strikes slightly in the money with deltas around 0.7 to 0.85. That gives you stock-like behavior with lower costs and slower decay. But maybe you're not sure which individual company to pick. Maybe you don't know whether Nvidia will outpace Broadcom or whether Amazon will outrun Alphabet. That's okay, because you can apply the exact same strategy with indices. You can buy call options on the S&P 500 through SPY. You can buy calls on Nasdaq through QQQ. The mechanics are identical. You are still controlling 100 shares. With a fraction of the capital, you are still limiting your maximum loss to the premium, and you are still opening yourself up to leveraged upside if the market moves in your favor. For many investors, especially beginners, index LEAPs are safer, simpler way to put the strategy into practice without worrying about which stock to pick. Size your trades responsibly. If your portfolio is $10,000, Don't spend half on one contract. Start with 1 or 2% of your accounting premium. For a beginner, that means risking $1 to $200 on a contract. Advanced traders can go up to 3 or 5%. But remember, the maximum loss is the premium. Don't size so large that losing it wrecks you psychologically. Plan your exits before you enter. Decide what profit you want. 50%, 100%, write it down. If you hit it, take some profits. Also, set a time stop. Roll or close 90 days before expiration because that's when theta decay accelerates. Don't let a profitable option die because you were greedy or careless. And obviously, diversify. Don't put everything on one ticker. Build a basket. NVIDIA for AI chips, Amazon for cloud and e-commerce, Alphabet for ads and AI platforms, Broadcom for semiconductors and infrastructure, Tempus AI for speculative growth. Spread across multiple names and stagger your expirations so you always have time working in your favor. If you are not sure about stocks, go with indices. Now, let's widen the lens. Why this strategy is so relevant right now? First, the AI megatrend. NVIDIA, Broadcom, Alphabet, Amazon, Tempus AI, all are riding the artificial intelligence wave. Data centers, chips, generative AI, biotech data. These are multi-year tailwinds. Second, liquidity. If rates ease or stabilize, tech valuations expand. Calls let you capture that upside without risking unlimited downside. And third, political edge. Pelosi's trades are public record. When millions flow into options right before legislation or contracts, that's not coincidence. That's asymmetric positioning. Options aren't magic. They're tools. Used correctly, they are efficient. Used recklessly, they are deadly. Never go all in. Limit each trade to a small slice of your portfolio. Stick to long-dated leaps. Know your max loss. Take profits along the way. Diversify across names. Write down your plan before you hit buy. The riskiest part isn't the contract, it's you. So let's bring this home. Stocks are ownership. Options are rights. Pelosi and other insiders use options because they let you control shares with less capital, defined risk, and asymmetric reward. Since 2014, Pelosi's trades have outperformed the market 3-1. Not by gambling, but by buying long-dated calls on companies like Amazon, Alphabet, NVIDIA, Broadcom, and Tempus AI. You can do the same. Start small, buy leaps, manage your risk, diversify your basket. Most retail investors will keep buying shares the old way. You now know the insider playbook. So here's my challenge. In the comments, tell me which stocks you'd target first with a leaps call. Amazon, Alphabet, NVIDIA, or maybe you are looking at QQQ. If this opened your eyes, hit subscribe, smash the notification bell, and join the Psycho Investor community. Every week, I break down real strategies that actually build wealth. And remember, stay psycho, stay hungry, and always play the game the way insiders do. This is Psycho Investor, signing off.